for joining us on Savvy Senior Sources, Talking with Experts. Let's take a moment and hear from our sponsors, GWG Life and Reverse Mortgages SIDAC.
What is the secondary market for life insurance? The secondary market for life insurance is an emerging financial market that provides individuals options with their policies. These options allow policyholders to benefit from the value of their life insurance. Policies are sometimes a financial burden, especially for seniors, as premiums often increase over time. The secondary market offers financial alternatives that can help policyholders benefit from their life insurance now.
Hi, I'm Beth Patterson, a certified reverse mortgage professional with Reverse Mortgages SIDAC. Bob's wife passed away, meaning his Social Security income was cut in half. His financial advisor suggested he look into a reverse mortgage. With the reverse mortgage, he was able to take a dream vacation with his nephew, and oh, the stories that they can share. After Bob passed away, his niece shared the difference that it made to the whole family. Dorothy did the reverse mortgage in order to protect her other retirement funds. With her line of credit, she was able to travel, buy a new car, and do home repairs. Years later, she's still benefiting from the reverse mortgage line of credit and not having to rely on her children. For more information on how you too can have security, independence, dignity, and control, contact us. Welcome to Savvy Senior Sources, Talking with Experts. Savvy Senior Sources guide your way through resources from A to V and with trusted advisors. We, through the shows, are introducing you to some of those experts, and in addition, we publish the resource guide, Savvy Senior Sources, and you can learn more about the resources and how to get a copy of the guide from SavvySeniorSources.com. I'm Beth Patterson, the owner and founder of Savvy Senior Sources, as well as Executive Vice President of Reverse Mortgages SIDAC. I'd like to take a moment to say thank you to our sponsors, GWG Life and Reverse Mortgages SIDAC. And now let's welcome my guest co-host, Marcy Holly from Minneapolis Public Housing. Thanks for being here again today.
Thank you for having me.
Yeah, it's fun. And welcome to our guest, Michael Freedman from GWG Life. And we are going to be talking about life settlements, which your company provides. And thank you for sponsoring our shows as well.
Thank you. Glad to be here.
Great. So let's start off talking a little bit about GWG Life.
Great. Thank you, and thank you for having me. GWG Life is a Minnesota company here in downtown Minneapolis. We're in the business of providing value for life insurance policies to seniors who are no longer able to keep those life insurance policies that they've purchased, can no longer afford them or just don't want them any longer. What we do is we pay policy owners a value, a market value for their life insurance policies, rather than the value they would get if they returned the policy or terminated the policy back to the insurance company. In the last 6 years, our company has paid policy holders almost $300 million in life settlement value, which in fact is about $270 million more than they would have gotten had they given it back to the insurance company.
Talk a little bit about that. On the people buy life insurance to protect their families, and through the years maybe they don't need that life insurance anymore, and so that's where options come in. They either drop the policy, stop paying, or maybe they can't afford to pay the premiums. Talk a little bit more along those lines.
Well, realistically, the vast majority of life insurance policies that get issued don't ever stay in force. The reasons people take out their policies, as you suggested, they were preparing as children were heading off to college. They wanted to get an additional life insurance policy just in case. They had lots of reasons for taking out life insurance, but those reasons change over time. The kids are grown up, you're doing well in other assets, You don't have a beneficiary any longer. That happens. So people, for reasons that they don't have anymore, will get rid of that life insurance policy. The other things that happen are people will be paying a level premium on that policy. You take out a life insurance policy, you pay the same amount every year, year after year, and you feel good about that. But as you get older, usually over the age of 70, the option to keep that policy at the level premium no longer exists. So in order to keep the same life insurance policy in force at a time when you're living on a retirement income, that cost increases, often doubling each year just to keep that same life insurance policy in force. So it becomes unaffordable. The premiums become unaffordable at a time when you're trying to make ends meet or trying to stretch your resources to pay for that. As a result, the very large, vast majority of life insurance policies lapse or surrendered before they mature.
Mm-hmm. So. Yeah, which is big. And a lot of times people think, I've paid this money in all these years, and now I'm just wasting the money. But there's some option with a life settlement.
Yeah, so why would somebody want to sell their life insurance policy?
Well, as I said, there's reasons that confront those individuals and their families about being able to afford that policy or whether they need that policy. Also, people need money. Later in life, particularly need for retirement income, to pay for health care, and in addition to pay for long-term care. They're looking for resources to continue to live in the lifestyle that they've become accustomed, or in order to care for somebody, for themselves or a loved one. And a life settlement, as opposed to giving the policy back to the insurance company, pays a policy owner a lump sum amount of cash in most instances. There are other options, which I hope we'll talk about. But the lump sum is, on average, 4 times, 5 times, 6 times greater than what they would get if they gave that policy back to the insurance company through a lapse or a surrender. So life settlements take an asset, something that's of value to that person, and give them, and as measured only at the value that the insurance company was going to provide in its cash surrender value, and pays a multiple amount for that individual. At its core, life insurance is considered property in the United States, and so therefore it can be sold on a market. And as I'm sure we'll also talk about, we have a very well-regulated market that seniors can sell their life insurance policies in.
Is there an age that you need to be before you can go ahead and do this, or could somebody in their 40s or 50s go ahead and sell their life insurance policy?
Life settlements are almost entirely a senior financial service opportunity. The age at which people's life insurance policies have a secondary market value is around 70 and older.
Oh, okay.
But the real measure is that of somebody who's had a change in their health from when their policy was originally underwritten 10 or 20 years ago. So that's the real measure for its value in a secondary market that we operate in.
So if somebody is younger but they've got a terminal illness, that could be an option to sell the policy.
Correct.
But otherwise, seniors that are older that just no longer need their policy. Or
Yes, because
can
it's
afford
at
the
those
premiums
ages
there.
also, as I suggested, it's at the older ages when the premiums start increasing and
Right.
become, quite frankly, prohibitive in order to keep that policy. And for the kids to take over the policy is also prohibitive if there are children. But the idea that that policy is going to stay in force becomes in jeopardy. And at that point, that's when people are in their late 60s, early 70s, mid 70s, that they're saying, hey, well, I can't keep this, and what are my options? And of course, a life settlement is a much more valuable option than giving it back to the insurance company.
So if they bought earlier in their life a block of life insurance policy for 40 years, and they know at 70 or 80 it's coming up, could they still do the life settlement, and knowing that their terms are coming up and that it's going to be more expensive for them every month?
Yeah, that's, again, when a life settlement is
Okay.
a very good option for them. That the original term that they took out the policy for, that established the premiums that people will pay for that period of time, will get renewed or not get renewed, or get renewed at a much higher rate. And certainly an escalating rate
Okay.
is what's of concern to individuals. So it becomes prohibitive, and that's where, again, the ability to keep that policy is challenged. And they say, well, let's look at the options, and life settlement option is the one that is perhaps the most valuable for them.
And a lot of the life insurance policy have the accelerated death benefit on them now. And talk about the difference between that accelerated death benefit and the life settlement.
Great. Well, actually, accelerated death benefits are an option in some life insurance policies. They're an option that is considered a rider on a life insurance policy, and if the carrier offers it, and if at the time the policy was taken out, it's chosen as an option, it could cost a few more dollars, in premiums in order to have that. But an accelerated death benefit is an option that it is available to somebody who is facing a chronic illness, again, toward the end of life. It needs somebody to come in and help dress or feed, needs ambulatory care. That's when an accelerated death benefit would be available. The life insurance companies offer that you can more or less take a portion of the death benefit today, rather than obviously the whole death benefit being left for the beneficiaries after that individual dies. Those are limited to just the chronic illnesses. Those are limited to a total amount of the death benefit. So it may be 10 or 20% of the death benefit that can be taken as a living benefit, as compared to a life settlement, which is really just a market valuation of the policy that provides unrestricted cash, to be used for whatever purpose, whether or not that person has a chronic illness or not. So it's an option, but it's an option both limited in its size and its availability.
Is there a minimum life insurance policy in order to do the life settlement to make it worthwhile?
Well, GWG Life will purchase policies from $100,000 and above.
Okay.
That may include several policies that equal that amount. So, it's not just, hey, you've got, a 50,000, but a couple of policies that have been accumulated over the years. That's the measure by which we look at it. It's per transaction, if you will. That's true across the life settlement market. I don't think that there's really any companies today that are buying policies that are less than that. And the real small policies, the $10,000, $15,000, $20,000 policies, are considered end of life, final expense policies, funeral policies, and those are not really eligible for life settlements.
Okay. What happens to the premiums when someone is selling their life insurance policy for a life settlement?
Well, that's one of the benefits. Clearly, one of the benefits of a life settlement is the elimination of future premiums. And in the business of life settlements, as I mentioned, you can sell your policy for lump sum cash, but there's also an option where you really just sell a portion of the death benefit, maybe keep some of it for your children or loved ones, your beneficiaries. But in any case, whenever you do a life settlement, whether it's to retain a portion of the death benefit or completely sell the policy, the premiums are eliminated, which is a real benefit. So again, at that age, somebody's dealing with income management, and this takes away the need to write a check to keep a policy in force. And again, in some instances, you can keep that policy, a portion of that death benefit, as part of your life settlement to leave for your loved ones.
Sometimes I find, and even with reverse mortgage, we find that people are really trying to have the money for what they need, but they're struggling with wanting to leave something for their heirs. And I am always stressing yeah, it's nice to get that inheritance, but while you're still alive, use that money for that vacation, for taking time and taking your grandkids to the zoo and buying them the extra toy, or spending that time.
Well, that's an important option of being able, to sell it and to live today. There's options, obviously, or the selling of the policy can allow them to buy toys or to go on vacation with the family. But our experience is, as seniors, as elders are needing long-term care, that the children are saying, look, we don't want that inheritance. We want to turn that policy into money today so that Dad and Mom can continue to live at home and bring home health aid in, or if need be, to move them to an elder care facility. We'd rather that be the priority than us getting an inheritance. And I think that's another way in which we see that interaction with
Yeah, and there
living
needs to be
today.
the communication, because it's usually the parents who are saying, no, no, I want to leave the inheritance, and the children saying, no, let's live
Yeah.
comfortably now, because the children, and I always say this to my clients too, what happens if life happens to them? Sometimes the parents don't realize what the children are giving up, or financially, to pay for home care, or to even pay for somebody to come in and clean the house, those types of things. And then, or just, so the children are helping to pay for services. What happens if life happens to them? They lose a job, they become sick, then they're financially aren't able to pay. Or you have 4 children, one can maybe, or 2 can maybe help cover the expenses, and then the other 2 can't, and then that can cause a stress and anxiety and fights in the family of, well, you're paying, I'm paying all of this, I get, so that's some of the benefits of.
In our experience, life settlements are a family decision.
Yeah.
Alternatively, the letting go of a life insurance policy is often done in a vacuum. It's parent just doesn't pay premium on it, or they make a decision to just take out the cash surrender value and not understand that there's a life settlement. But as we've discussed, life settlements are an ability for the whole family to continue to enjoy their parents and the continued life of their parents. It involves them being involved. We often have adult children who are supporting their parents, not just emotionally, but financially. We have those children saying, hey, help us learn more about helping our mom and helping our dad with a life settlement, because they don't know about it, but we want to see what this policy could be worth, and how can it be used, and those sorts of things. So more often than not, we're involving not just the owner of that policy, not just the person who's the life is under the policy, but their children as well.
Needs to have that family discussion. Give some examples of people who have used the life settlement and how they've used it.
Well, I think one of the most powerful examples, as we've come to see the baby boom generation getting older and elders who are in need of long-term care. I think what we've come to see more frequently are people who thought, well, I'm going to go into a nursing home, and I don't have the money to pay for it, and I'll just go on Medicaid, and I'll go into a nursing home that way. But the reality is nursing homes are not going to just take anybody that shows up on Medicaid, but if they can sell their life insurance policy, and they can convert their policy into something of value, again, that 4 times, 5 times, 6 times cash surrender value, a significant amount of money that can be used to get them into the nursing home of their choice, to be where their friends are, to be close to the kids, not just whatever county bed is available that week. Then they can use that money to get them in, and then ultimately they'll be converted onto Medicaid down the road. So we're seeing more of that, and that's a recent example that we've had. Another is an important element of people have different types of life insurance policies, and one of the types is a term life insurance policy, which doesn't have a cash value to it. So if you're going to give it up, the insurance company is going to say, thank you for your premiums, goodbye. But you can sell that term life insurance policy to a company like GWG, and you'll get something instead of nothing for that policy. And again, the importance is you're getting rid of that premium, getting something back of value. And that's another area that we see quite a bit of growth in, the awareness of term life policies having a market value.
You mentioned about going into the facility or residence of their choice. That's a big thing. When you spend down and you only have enough money, you're qualifying for Medicaid, you lose choices, you lose your options, and you can remain in control when you've got the money to say, no, this is where I want to go, even if it's private pay for a little while. It gives you those options to
it's important, and I think also just to mention, when someone is applying for Medicaid, the Medicaid rules look at the life insurance policy only at its cash value, not at its market value, not at its life settlement value. So if there's any life insurance that has anything more than $1,500 of cash value in it, it has to be surrendered in order to take the cash out of it and be used. Several states, Texas and Kentucky, have already passed into law, but Pennsylvania, New York, and Massachusetts and Georgia are all looking now at legislation that would say to seniors who are applying for Medicaid for long-term care, wait, look at a life settlement, because you may not have to liquidate all your other assets to qualify for Medicaid. You may not need Medicaid, because the life settlement on a larger policy could mean never going on Medicaid. But at the very least, it could mean getting them into the facility of their choice at the outset. So it's a very important issue, because life insurance policies are being forced to be terminated just to qualify for Medicaid, but that policy is worth way more as a life settlement to that family than it is giving it right back to the insurance company and being done with it.
Yeah. The Medicaid will pay for services, but the government, and the Medicaid is a government-funded program, those dollars aren't going to be around forever, and that's why some of the states are looking at saying you need to be using some of your own assets. And Minnesota has the campaign Own Your Future, talking to people about how are you going to plan ahead and have that discussion so that you can know how you're going to pay for the care, because we can't all be on Medicaid in the future. The dollars aren't going to be there. So that's important. How can someone who is interested in selling a policy know that it's safe to do so? We touched a little bit about that, but...
Well, we're very proud as a company, we're very proud as a life settlement market of the consumer protections that are in place today for when somebody wants to sell their policy. First and foremost, we in the transaction, we're the buyer of that life insurance policy. We have to be licensed by the state insurance department, obviously here in Minnesota, but in all the states, in 42 of the 50 states, there are laws on the books that's covering over 90% of the U.S. population. So anyone who's seeing this anywhere pretty much is likely to be in a regulated environment. It's a senior financial service transaction, and because of that, the laws that have been adopted make sure that the senior knows that lots of information about the transaction. There's a lot of consumer disclosures, including that there's an accelerated death benefit option, including that there's other ways to keep your life insurance policy in force. There are risk factors that have to be disclosed to that individual. In addition, in the transaction, everything is transparent. All offers that person makes, or that person receives, are being given to that individual and to their advisor. The amount that they're going to receive versus any commissions that would be paid, it's fully transparent in that transaction. And I just want to make one important point. When we buy life insurance policy from an individual, we have to have their doctor's certification that they're of sound mind, a competency certification, which is tremendously important.
Okay, and we're out of time. Covered a lot. Thank you, Michael Freedman, for being here, and thank you to Marcy for co-hosting today. And to find out more about selling your life insurance and converting it into a life settlement, contact GWG Life. And again, thank you, and go to SavvySeniorSources.com for more information. Thanks.
Provide for your long-term care. Convert your life insurance towards payments for long-term care. If you are concerned about future health care, you can convert your life insurance to pay for home care or assisted living. Health problems can be stressful enough without the added burden of financial obligations. If you feel that you no longer need your life insurance policy, you may want to apply the value towards long-term care.
Hi, I'm Beth Patterson, a certified reverse mortgage professional with Reverse Mortgages SIDAC. Mike and Carol decided that they needed a one-level home to fit their changing health needs. They used the reverse mortgage to purchase their new home instead of using conventional financing. This has benefited them greatly. Barbara decided to do a reverse mortgage to pay off her conventional loan that she was making monthly payments on. She had funds left in the line of credit after paying that off. And a year or so later, when she fell and broke her shoulder, she was able to tap those lines of credit to pay for her home care. As she said, she would have been up the creek without a paddle without the reverse mortgage. If you'd like information on how to receive security, independence, dignity, and control in your retirement years, contact us.